If you've been thinking about buying a home, but you've heard a few different things when it comes to the down payment in order to buy a home, if that's you, don't go anywhere because in this video, we're gonna bust a few of those down payment myths. Hey, Jose here, your SoCal Realtor. If you are thinking about buying or selling a home, don't hesitate to reach out. My team and I, we're here and ready to help you with your real estate needs. Oh, and real quick, before we do get started, I just want to encourage you to stay to the end of the video because I have a free gift that I would like to leave with you. Okay, so first of all, if you've ever heard anyone tell you that you have to have perfect credit in order to get a home loan, or maybe not perfect, but really high credit scores if you want to qualify for a home loan. No, first of all, no. You don't have to have perfect credit. Now, obviously, yes, you can't have horrible credit. I mean, you can't have, I don't know, like a 400 credit score. You're probably not going to qualify for a home loan, but you don't need perfect credit. Now, the obvious, yes, the better your credit score is, the better the terms are going to be for your home loan, meaning you're going to get a better interest rate on your home loan. But that doesn't necessarily mean that you have to have an 800 credit score or even a 700 credit score in order to get approved for a home loan. Yeah, for a 3.5% down payment FHA home loan, which, quick side note on that, is a really popular loan option, especially for first-time home buyers. But the 3.5% down payment FHA home loan, you're only required to have a credit score of at least 580. Now, you can get an FHA home loan with an even lower credit score, in fact, actually as low as 500. However, you won't be able to do that with a 3.5% down payment. You're going to be required to put 10% down for the down payment. Another real popular loan option is the conventional home loan. Honestly, in my personal opinion, the FHA home loan and the conventional home loan, those are hands down the two most popular home loans that are out there. Now, this is not a scientific fact. This is just my personal opinion based on my experience as a real estate agent. But I would say these are probably like 70% of the home loans that are being used when buying a home. Now, with the conventional home loans, the credit score requirements, it can vary a little from one lender to another, not really by much, but I'm going to say that typically you're looking at somewhere around a minimum credit score of about 620 for most lenders.
Okay, that's not too bad.
So do you have to have perfect credit in order to get a home loan? Well, as you just saw, no, you don't have to have perfect credit. You just have to have decent credit. Now, this one I don't hear a lot, but from time to time I do. Yeah, if I want to buy a house, I have to save 20% for my down payment.
Is that true?
Now, there are still some that do believe that you have to have 20% saved for the down payment. In fact, actually, here's a stat that just might surprise you. Just last year, of all the homes that were bought, the average down payment that was put down for those purchases is only 7%. So again, you don't have to have 20%. With that said, of course, obviously, there are advantages to putting a bigger down payment, to putting 20% down. Because when you put 20% down on the purchase of your home, you're able to avoid what's called private mortgage insurance, or PMI. And listen, if we're being totally honest, PMI, it really doesn't do a whole lot for you. In fact, what it really does is it protects the lender in the event that you or any buyer were to default on your home loan. Let's be honest though, 20% saved for that down payment, I mean, that's a lot of money. And especially if you're a first-time home buyer, it's not always very realistic. Or as we just covered in the first myth, not even required. Because I mean, if you were buying, let's say a $500,000 home and you were planning on putting 20% down for the purchase of that home, that's $100,000. But if you're planning on using the FHA home loan, remember, it only requires a 3.5% down payment. So for that same $500,000 home, we're only talking $17,500. Or if you're planning on using a conventional loan, which only requires a minimum of 5% for the down payment, then it's $25,000 for the down payment. Better yet, if you're a first-time home buyer, you may even be able to qualify for the 3% down payment conventional home loan, which in this case is only $15,000. Now, of course, which home loan should you go with? Should you go with the conventional home loan? Should you go with the FHA home loan? I mean, both have their pros, both have their cons. I would just say this, talk with your lender, weigh your options, and go whichever loan makes more sense for you. Here's another one that I've heard a few too many times now, and that is, if you're thinking about buying a home, then you need to hurry up, get out there, start looking at homes now, find the one before someone else does, find the one that's the perfect home. And when you find that home, then get on the phone, call your lender, say, hey, I'm ready to get pre-approved.
I don't know about that.
Listen, if you've had somebody tell you that, I'm sure that they were very well meaning in the advice that they gave you, but that's bad advice. Because when you're ready to start going out there looking at homes and you do find that perfect home, you need to be ready. If you're not already pre-approved, after you found that home, now you're over here, you're talking to your lender, what do you need? You're getting everything together, let's put it all. Someone else that already is pre-approved, they might have also found that home. They might have also liked that home, and they just bought what was supposed to be your home. Always get a pre-approval first, because now when you have that approval in hand and then you start going out looking at homes and you do find the one, the perfect home, this is it, you can submit a complete offer and purchase your home before someone else does. Okay, so you've run the numbers and you know more or less this is the payment we need to stay within. If we go too much above that payment amount, it's going to be outside of our comfort level. So now that you know that and you sat down with the lender and the lender tells you you qualify for a $600,000 home loan, does that mean you have to go out and buy a home that is $600,000? If the payment for a $600,000 home loan falls within your comfort level, then sure, go out and buy a $600,000 home. If it doesn't though, then find out from the lender, hey, this is kind of the payment we're trying to stay within. What is the purchase price for that? Just because you qualify for, in this example, $600,000, that's it. That's what you have to look for. No, I mean, obviously, sure, you can look at homes for less. You can look at $500,000 homes if you wanted to. Something that I do like to tell people that I'm working with is this, is what you qualify for on paper, it doesn't always 100% of the time match up with what your comfort level is. The down payment, that's not the only money that you're going to be required to bring to the closing table when you buy a home. Yeah, there are closing costs too. That is something that sometimes anyway I find that it can get forgotten or not thought about. Now, here, I will say this. If we go back to like we were talking about a moment ago, the down payment, we know exactly how much that's going to be. It's always going to be a set percentage of the purchase price. The closing costs, however, that one can vary. Not by a lot, maybe a little bit anyway, but it can vary. For instance, let's say you're buying a $600,000 home. The amount that, we said that you got pre-approved for, but you're buying this home with the 5% down payment conventional home loan. So in this case, again, we already know what the down payment's going to be, 5% of $600,000 or $30,000. But remember, there's still closing costs too. Now, this is a very rough estimate, but you're usually looking at somewhere between, I'm going to say like 2 to 3% of the purchase price in closing costs. There are some cases where closing costs could be even as much as 5% of the purchase price.
What?
In my personal experience anyway, it doesn't really get that high. It's usually more in that 2 to 3% range. Just understand this though, most lenders, they should be able to give you a much closer, I'm going to say much more accurate estimate on what your closing costs are going to end up being. But to kind of give you an idea, a rough estimate using that 2 to 3% estimate, that means that in addition to the down payment, you're looking at anywhere from $12,000 to as much as $18,000 in closing costs too. Now, you might have heard what I just said and be thinking, oh great, I mean, down payment, closing costs, and I've heard of some of those down payment assistance programs that are out there, but aren't those really only for people that are first-time home buyers? Not necessarily. Even if you have owned a home before, you don't necessarily own one today, you don't own one right now, but you have owned a home before, doesn't that mean then that, hello, translation, I'm not a first-time home buyer? Believe it or not, you may still actually be eligible for down payment assistance. For most of the down payment assistance programs, and this doesn't necessarily mean all of them, but for most of the down payment assistance programs that are available, you cannot have owned a home in the previous 3 years. So as long as you do not own a home today, and it's been at least 3 years or longer since you last owned a home, then yeah, you might actually still be eligible for that first-time buyer down payment assistance program. Yeah, but those are only for low-income people, right? Yes, it's true that most of the down payment assistance programs, they do have income limits as to just how much money you can make per year. However, you'd be surprised just how high those income limits are. Oh, quick side note, there's actually a few programs that even help with the closing cost money too. Be sure to talk to your lender, find out how those programs work, and if you live in California, let me know. I'll be able to refer you to a good lender for that. It's true that for most home buyers, a traditional 30-year mortgage is the loan option that's going to make sense for most people. But there are some situations for some people where it might not be the best option. If you have the ability to afford maybe a little bit higher payment, then why get a 30-year mortgage? When maybe it's possible that you could have your home paid for free and clear in half the time with a 15-year mortgage. Again, yes, the payments for a 15-year mortgage, they are going to be a little bit higher. I mean, for example, that $600,000 home we were talking about, you're paying it off in half the time. But which is why, if we're being honest, the 30-year home loan, it's the mortgage most common, most people have. But listen, if you're fortunate enough to be able to do that, then I don't even know how much you'd save in interest doing that. I would say just talk to your lender and find out your options on that. Hey, I'm glad you're still here because, as I mentioned earlier in the video, I do have a free gift for you, and that is my free home buyer's guide. It's packed with a ton of information that's all geared to be able to help you, to be able to be your blueprint, to be able to take you from step one, hey, we're thinking about buying a home, and guide you all the way to the finish line, which is owning your home. Go ahead and click on the link in the description section below and download your free guide. Of course, if you have any questions at all, or if maybe you are thinking about buying or selling a home, my contact information is below. Feel free to reach out. Otherwise, until then, catch you in the next one.